Top three things in my notebook this morning. Number one, European equities. Number two, U.S. equity volume, which should really be number one, but we'll keep it number two. And number three, the U.S. dollar. So first on European equities, one of these things is not like the other. European equities do not look like U.S. equities. That has been the story since the beginning of the year and continues to ring true. This morning you're seeing the leaders lead on the front end of European equities. So you have markets that I'm sure you're long, like Denmark, up 2.2%, up to 15.2% year to date. Ireland up almost 10% now for the year to date. So again, leaders leading. And again, these are the markets that are operating on a one-year lag to the U.S. economy, number one. And number two, they have what we really like here, Hedgeye Playbook 101 for a growth market, which is, of course, a strong currency. Euro pushing higher versus the dollar, yet again this morning at $1.38. Second point I'd make is on U.S. volume. There is none. So what are you going to do about that? I put this up in the chart of the day. It's in the early look. It's also going to be in a video that we're going to do later on in the day. There is no volume on the up move. So again, when you're making A, lower highs, and B, for the Russell and the NASDAQ, which remain bearish trend, no less, which is really bad, and you're doing it on no volume, the collective volume on the 5-day ramp is down 14% versus the 1-month average. That is not good. Not good by our scorecard, but if you're using a moving monkey, don't worry about it. U.S. dollar, point number three. U.S. dollar sucks. I mean, so it's making a lower high. It's below its tail risk line. It failed at the trend line of resistance, which is in the high 80s versus the U.S. dollar index. And again, you have no support to the year-to-date closing lows. So again, that is not a pro-growth signal. Neither is bond yields being down for the year-to-date. So we'll stay with our call, which is, of course, inflation accelerating and the U.S. consumer slowing. So those are your top three things.